Welcome to the Economics of Real Estate. I'm Dylan, that's Matt. Our teams help buyers, sellers, and investors make smart real estate decisions as we break down all the data that we get here from our market stats. If you'd like to reach out and connect with us, check out the links in the description below. Matt, how you doing, buddy?
I'm good, man. It's been a wild start to the year. Donald Trump's really stirring the pot, and a lot of data coming out in the housing market that we're excited to share that we think might shape the spring market. How about you, pal?
Yeah, same. I'm doing good. I got to say that last week it was interesting, in my circles and even just on social media, you're watching people respond to the news of the tariffs and, how that might impact them and how it might impact our country. And I think that there's a lot of stress out there for people and there's a lot of uncertainty. And so I think it's important for us to of course keep doing these videos so that we can show the data. But I want to take a moment to remind people that a lot of people don't know what's going to happen yet. The top guys don't know. It's all still being worked out, like tariffs on day one, then tariffs later on that week, then at the end of the month. Now they're delaying it 30 days. Like, it's always a moving goalpost in terms of what's going on there. But what we do know is that realtors are the best at discerning the market of the moment, right? We're boots on the ground. We're local. We're watching how many listings are out there, how many showings are taking place. Like, we've got a feel for that before anybody else does. And the most important thing you can do is just take stock in what your local market is. Pay attention to the kind of key indicators on whether it's a good time for you to buy or sell. And that's really all you need to worry about, because trying to forecast and figure out everything, what might happen in 90 days, it just doesn't work. And to be honest, even in the craziest markets that we've seen over the last 15 years, the highs and the lows, it's the same thing. That same uncertainty was there as we were going through crazy multiple offers. And then there was little bumps in the road. But if you just paid attention to what was going on in your market where you were buying or selling, you always made out okay.
It's absolutely true. And sometimes the news is telling you one thing, but we're seeing a little bit different, in our business and what's going on in the street. So it's always great to have a conversation with a realtor, a mortgage broker, even to a lawyer to an extent, on what they see happening in the market.
Yeah, absolutely. And I will say this, like you and I, when we first started looking at the January numbers and where we were at for the start of 2025, we were seeing so many more active listings in comparison to what we saw in January 2024. And we're like, we might not see the run up in multiple offers that we saw for the first 2 months of the year last year. It might be a little bit slower. We're seeing new listings starting to stack up a little bit. Ooh, this is looking a little sluggish. But then I do a consult for a client the other day on their semi-detached home. There's nothing for sale. And the last two homes that just sold now in January hit record highs. So it's like, okay, the data that you're seeing in the news and even what we're seeing as overall, it never tells the full story for what your market is. And that's why those consultations are so important.
Yep.
All right, buddy, let's jump in and take a look at York Region. We're seeing that average price sit there just over 1.2. Median price, of course, just a little bit lower than that at 115. And, not to get ahead of ourselves, but I jump over and I just see King leading the charge there in terms of median sale price. Nothing that we wouldn't expect, but it's nonetheless, it's interesting to see.
It's interesting to see, and I think that median sale price by location, this includes all your home types. So, of course, in King, you've got a lot less condos that would skew the price to the downside. So does East Gwillimbury. They have not many condos, if any. And then, you start to see the Auroras, the Richmond Hills, the Markhams, where you're going to get a lot more condos there.
Yeah, absolutely. And as you and I were talking offline, looking at Vaughan, where we know detached sale prices can do quite well, but they also have a ton of condo inventory around that Highway 7 stretch in particular. So seeing their median price a little bit lower just makes sense. Average sale to list price, this is what I'm talking about. We're sitting right at 100%. So again, that reminds you, there's a bunch of homes that are selling right now over the asking price in York Region to get that average there.
Yep.
Yeah. Median days on market, we're looking at 25, average days skewing a little bit higher. And again, that's for the ones that have been out there sitting, since the fall. I would say because we're looking at kind of across like the majority of the home types there, it's the condo market that's skewing that number up so high.
Yeah.
Yeah. Flying over here to York Region, looking at our active listings. Matt, I'll go back a slide for a second. Looking at that 90th percentile of homes at 1,850,000, and then coming over here and seeing the amount of, homes kind of in that 2 million plus price range is very interesting to see.
That's a huge stack of homes sitting there. We had 41 homes sell for over $2 million, and we've got 746 sitting there, the bulk of which are detached homes. You've got other homes in there like farms and rural properties, but that's a huge bulk of inventory sitting on the market there. And compared to what we saw last month, not many sold, just 41. We should see a pickup in that area, but to what extent? Enough to eat into that 746. It's quite surprising that they're taking the bulk of the active listings on the market there.
Yeah, and now coming across, just again, we've talked about this in terms of what's the sales volume doing, because I think at the beginning of last year, we anticipated that we would, quite comfortably surpass the sales volume of 2023. And we just barely got there. Like, it wasn't by much. I think it was 1,000 sales or something like that. And it's interesting to see that run up here in transaction volume as we look at, kind of that spring market of 2024, and then how quickly it tapered off. And then obviously where we ended up for the end of the year. But we definitely trended up in terms of our above asking or above the list price. Just in terms of where we were finishing off last year, right? We kind of declined there from our summer months. We had a really bad August and then tweaked up, but our median days on market is trending upwards. So it's kind of interesting to see. It's like it's hard to generalize the market, right? Right? Because you're looking at specific pockets that do so well, and then others where we're trending upwards in days on market.
Yeah, I love these graphs. They give you the last 2 year snapshot of what's been going on, 2023 all the way up until now. So we can kind of see median price has really been stagnant. It's heading down a little bit, but not significantly. It's what you would expect with the interest rates being so high. And to be honest with you, for it to hold the way it has with the amount of interest rates we've seen, that's a great sign. Transaction volume, yeah, we've had that peak in 2023. We had a smaller peak in 2024. Are we going to see an even lower peak in 2025? It's very possible with what's going on geopolitically wise. What's going on with a lot of stuff, especially with the prime minister, elections potentially coming up. So are we going to see this trend come down a little bit more? It's very possible. Days on market increasing, like you said, but I'm looking at the bottom left there, the active historical listings we saw in 2023 at peak, and then 2024. Are we going to see that next large chunk of active listings pile on? And
absolutely. Taking a look now at the above list price, and again, here's where we're seeing that trend upwards a little bit. When we take a look at 2024, kind of where we were starting out, and then seeing where we are now, upticking a little bit to that 28% in comparison to finishing down at the end of 2023. That last percentage there we have at 16%. But seeing our peak here, this was that February, March of last year where we started to see those numbers really pop off because of such low inventory that was on the market at the time. And even that, it's funny to say that in comparison to where we ended up, right? I think the tale of last year was really that there was a bunch of inventory out there. So it's funny to reflect back on that spring segment, just in that little window where there was nothing for sale. And I feel like in a couple of pockets that I'm watching right now, that story is continuing. I'm looking in one neighborhood where there's literally nothing for sale for the similar home type. Whereas last year at any given time, there was 8 to 12 homes available that a buyer could go pick up. Right now, there's nothing. Mm-hmm. Yeah, I don't know. Is there anything else in this chart that really sticks out to you?
Well, we are behind where we were last year, that's for sure. We were a little bit higher, probably closer to the 30 to 35% range. I think as well, I think the condo market is softening this as well, because a lot of the condos aren't being sold.
Mhm.
aren't being priced under value, trying to hold offers. So that might be one of the reasons we're seeing this. I think detached homes in prime locations that don't have a ton of competition are definitely being priced low, and there's tons of buyers out there for those types of properties.
Yeah, and I think that's important to note for this conversation is when we are evaluating these across our different pockets, you have to separate condo from freehold. You have to separate different pockets because that's the reality of it. This is nice to get a good little pulse on the general vibe, but you and I have spoken about this a few times now. Looking at freehold and condo together, even just to get a feel on what's going on in the market, it's too skewed right now. There's the condo market is too slow. There's too much inventory. There's not enough stuff selling to be able to accurately look at those overall stats anymore. Like they truly just need to be separated.
They need to be separated. I fully agree. And um, I think later on we'll kind of show just why there's this massive separation too, just because of how many condos are being built and how few detached are being built or have been built over the last 10 years.
Yeah, and so now we're going to come into a little bit here and compare our month over month stats as we take a look at median price, transaction volume, and it's interesting. We're already seeing just a little bit of a decline, funny enough, which is interesting to see because again, we're looking at overall for York. Um, but there's other pockets that have been doing quite well, but we're seeing down 3.9% in median price month over month, transaction volume being down 22%. Yeah.
Yeah, transaction volume. Now, okay, you're going to potentially expect that from December to January, you would get more potential transactions. So I think the fact that we were down 22%, and even if we look at last year, year over year, we're down 25% for that January on the amount of actual transactions that are taking
Hmm.
place. Another big thing to look at is the new volumes listing up 152% month over month. Now, that's not many people list their property in December, so we expect to see that number skewed. But let's look at last January to this January, we're up 45.6%.
Yeah.
So we know that we're getting more listings added to the market compared to what we saw last year. And I think last year was a little bit stronger in the beginning of the year because we didn't have that kind of rush of listings and we had the buyers out there that were looking. This year, we're having a lot more sellers on the market. Maybe real estate agents are telling their clients that, hey, this is what happened last year. You got to get out there
Hmm.
early. And maybe we're seeing some stuff pulled forward a little bit. Um, so, and then the other one, the termination volume at the bottom here, I wanted to talk about. Um, you know, we've had 487 terminations in January, which was up 60% year over year.
Hmm.
Um, and that kind of tells me that places aren't selling, so they're either relisting them at the same price or they're taking them off and relisting them at a lesser price. Maybe they're changing their strategy. Maybe they're trying to get a bidding war. But it's showing me that places aren't selling as quickly as before. So there's some adjustments that are being made to those listings. Anything else you want to add to the transitions volume?
Yeah, I want to speak specifically to the termination volume that you just brought up and seeing that increase of almost 60% when we compare the same time last year. I think the big miss that is happening is just like you said, there are people out there that are saying, hey, this is what happened in January 2024. Worked great. Hold offers. It's going to be fantastic. It's January. There's not a lot of listings out there. But I don't think they're taking enough time to actually look at what's out there because not every neighborhood is like that. There are some neighborhoods right now, yeah, that there's not a lot of competition. Be a perfect time to hold offers if you get your pricing right. And then the flip side of that is I think that there are people that are holding offers right now at prices that have no business holding offers and it's not working out for them. And that's why you're seeing that cancel and relist. That's why you see new listing activity go up and termination go up. And it's great that we've got this chart for the first time showing that termination volume to counteract as we saw new listing volume go up, because usually you can't have one without the other unless it's really bad and we're only getting new listings without the sales. So to me, what this says is there's too many people out there picking the wrong marketing strategy, whether it be pricing just off the get-go or they're holding in a situation where they shouldn't be.
Absolutely. I've noticed it myself. I've looked at price. I said, this is, 50,000, 75,000 below what I think the place should go for. Like, are they selling it cheap? And then I dig in deeper and you realize, no, they're holding offers. And ultimately they're not panning out, and then they're just
Yeah.
relisting them to a price that honestly they should have just started off in the beginning with.
The first time. Yep. Yeah, absolutely. And I think one of the biggest misses, there's two big misses that I find when people make that mistake in their marketing strategy. One is they get the pricing wrong from the get-go and it deters people to take a look at it. Two, there's just not enough buyers looking in the neighborhood right now for that strategy to work. Right? So if you don't have the buyers, the multiple offer strategy, the bidding wars, it's just not going to pan out because you need enough people coming to the property to bring that from your low price back up to market value, and ideally a little bit above is how that strategy would work. And it's just not the case. And I've, same as you, I've seen it a couple of times personally. I've gone out, taken my buyers, I've inspected a few properties, and I get there expecting to see a lot of business cards because agents are supposed to leave their business cards after their showings. And I don't see any business cards. It's now their fourth day on the market. And I'm like, maybe the seller's just tidying up after every showing. They don't like to leave them out. It's never a good idea either in terms of generating a buzz. You want to see those cards there. But sure enough, offer night comes and that listing gets no offers and doesn't sell, cancels, relists. So again, I think it's a missed strategy, and that's why it's so important to evaluate your current market, your local market, as opposed to taking a look at, is a January trend.
Yeah. And you know what? It's not even, it's like looking at, let's say you're from Newmarket, you're looking at the Newmarket market, but then you're looking at your little community as well that you're in, whether it's
Yes.
Bristol, London, or Central Newmarket, and making sure that in that area as well, you're seeing the trend that allows you to do the strategy that you want, because that's what that area is saying is working for those types of properties.
Exactly. So say you've got somebody come down to Aurora. Say you've got somebody looking in Bayview Northeast where there's 6 townhomes available right now. Flip side, you go to the other side of Bayview looking for that same townhome. There's nothing available, right? So when one comes up and the two neighborhoods hold different pricing just a little bit, there's different strategies to take into account when you're on the listing side, and then different choice available when you're on the buy side.
Yep.
All right. Take me over to Simcoe. You've been our champion for Simcoe for quite a while now as we take a look at the opportunities that we've been seeing out that way, particularly in Barrie. And I mean, right away, when you're looking at York compared to Simcoe, that average price, everything becomes just that much more affordable. Median price even more so with $747,000.
Yeah, this is more of like a pyramid, sideways pyramid on how you kind of think it should look. Where it builds up to where the consensus is in the middle of where the bulk of homes are selling, and then it tapers off down to the downside. Where we saw with York Region, it was kind of this big chunk of property closer to the end than more in the middle. So we're seeing that the average house is selling anywhere from around 600,000 to about 800 and $900,000. So much more affordable out there. I think what we're seeing in Barrie is a lot of people moved to Barrie during the pandemic. They were working from home. It was a great option. Maybe employers are sending a lot of these people back to work, and they're saying, hey, you know what, I'm a little bit far for that right now. So we did see over the last 2 years quite a bit of a pullback in that market there. And when we were doing our reports on a monthly basis over the last year, we could see this transition happening, and we were talking about it quite a bit. But now it seems like a lot of that hollowing out has kind of happened now. And it's holding up a little bit better than what we've seen in some of the other areas. And we'll get to those stats in a second there. But definitely a much more affordable range. And you can see that almost 65% of all the sales were detached homes. So you can see in this chart that, this is mostly where the detached are falling in.
Yeah. And then when you come down to looking at how homes are selling in terms of the asking price, we're looking at only about 11.7% of the homes selling above asking, with an average sale price to list price of 97%. So on average, people are buying at 97% of the asking price. Median just slightly above that. And again, that's where you get some of the extremes that throw off the averages, even percentage wise too. Because you have some of those ones that are grossly overpriced, grossly overpriced. And when they get negotiated down to where they should be, then ultimately you end up with the average sale to list price being that much lower in comparison to kind of the median price there.
Yeah.
Days on market hovering around 51 when we look at the average, up a little bit higher than York Region when we take a look at the median. We're now at 42 days on the market. So that's interesting to see, taking just a little bit more time as you kind of move north a little bit. Tiny doing quite well, in terms of their median price. And it's interesting, we go back down to, the types of homes and whatnot. And you've got Barrie further down the list there, specifically with, more condos in the area as well.
Yeah, I think you take the condos out, they're quite a bit higher on that scale.
Yeah. Perfect. All right. Coming into Simcoe and looking at some of the trends that we've seen from January of last year to January 31st of this year, you can see again that median price holding fairly steady. Again, that little blip, it's funny. You wouldn't have expected this to come when it came, because a lot of this happened when we got our first rate cut last June. The cut happens, and again, just felt like everything got really slow. And then August was the worst August on record for like 20 years. And it's just not necessarily the timing in correlation with those cuts that we thought we would have had. But nonetheless, the median price holding is a great sign. And those that are saying, where's the 20% market crash? Well, the correction has already happened. From March of 2022, we started our march downwards. And, from that peak, I think when you and I looked at this number last, from the peak in the summer, I think we were down 19.5% or something like that. So that has already happened. Now we're holding steady over this time frame. That big correction, that came down from a peak that had no business being a peak. It's not a real number. So even that 19.5% that we're talking about is not truly accurate to how a lot of people were impacted by the correction in pricing. That would have only been the people that bought in that 3-month window, kind of around the peak.
Yeah. And one thing that's not included in there is, sure, prices came down 20% over the 2-year period, but you're also not accounting for the inflation for those 2 years as well. Let's say it's 2-3%. That's, you're looking at another 6% that those houses haven't grown. So kind of you're almost at a 26%, 24 to 26% drop in housing prices. So that's a significant drop. That's should be counted as kind of recessionary when it comes with the house.
Mm-hmm. Yeah. And so I think the message there to just take away is like, I don't see, actually, maybe that's not fair to say once we get to the tariff talk. Until that part really comes to be known, the big correction has happened. Right now we're marching along, and the counter argument to the tariff talk is going to be, if they continue to cut interest rates, which now is being readjusted, and we'll get to that, we could see something different in our real estate market in terms of a resurgence instead of that recessionary track that we were looking at. Taking a look here at Simcoe before we move on, was there anything that you wanted to add there, Matt?
Just looking at this, 2 million plus is 217 homes, but it doesn't make up the majority of the active listings by price range like it did in York Region. We can also see the million to 1.25 million, that it's pretty high at 313. And we're just not seeing the sales in that volume or in that area to suggest that we're going to see a lot of strength in there. And those numbers might have to come down, because from that previous chart that we were on, we're seeing the bulk of the sales happening from 600,000 to 900,000. Mm-hmm. So in that range, those types of homes in there are going to see, a lot more action. It's the 1 million to the 1.25, I think, is a little too high. And there might be some price adjustments that have to be made there.
Yeah, for sure. When you see this big boost there in the million to 125, like you said, we're seeing a little bit more stagnation there in terms of active listings starting to pile up.
Yeah,
again, still the bulk of these still being detached homes. We're looking at 64% of all the properties that we're looking at that are available are detached properties, detached freeholds. let me go back there again. Looking at above asking price in terms of what how we ended last year and where we're at now. We're at 12%. That 9%, Matt, is that January of last year, or was that December of 2023?
The 9% was December of last year, I think, or no, that was January. So
That would have been
you're
January.
looking
So
at around 9% for January and 12%. So we have seen a little bit of an uptick to start this year.
yeah, yeah, uptick in Simcoe County in terms of homes that are selling above asking price. We're looking at 12% now compared to 9% last year. Uh, Interesting to see, nonetheless. Again,
Yep.
I don't know if I'm not saying that that's the strategy for everybody. You got to be watching your neighborhood. And as we saw with the terminated list previously, there's a lot of people getting it wrong right now.
Yep.
Taking a look at our month over month and year over year sales, look at that median price, same month last year. We're looking at 4.2% growth there with just a slight dip seasonally as we go month over month in terms of our median price. Transaction volume, they're up month over month compared to December. This is what we would have expected to see in York, but we didn't quite see it there. Down just slightly in comparison to last year. I mean, that makes sense to me in terms of the other data that we were looking at. Uh, New listing volume up quite a bit in comparison to the previous month, and same with year over year. That's been the tail of the market as we've watched in January
The
2025.
I will say the new listing volume year over year at 6.3% is actually quite less than what we're seeing in a lot of other markets right now.
48%. I think when we were looking in York, it was
48%
46.
in York
Yeah,
region, only 6.3 in Simcoe. And you've seen a 4.2% increase in the price year over year, whereas
mm-hmm.
in York region, I think we were just 0.1% price increase year over year.
Yeah,
So that's a great sign for Simcoe that it's starting to level out. It's starting to get to where it bottoms out and potentially starting to climb back up that hill.
yeah. And days on market down comparison to last year, up slightly compared to the previous month, but down in
To be
comparison to
expected
year over
coming
year.
from December.
Yeah. Yeah, exactly. Exactly. Termination volume up again, not to the same extreme that we saw in York region. And are they just getting their pricing strategy better in Simcoe? Is that what's going on here, or is it just the seasonality of it in terms of where they are?
I
Um,
think if you're buying or selling in Simcoe right now, you're in a very stable market to make transactions,
yeah.
especially if you're selling a house and buying in the same areas. This is a very stable market. Should give a lot of buyers confidence that prices have stabilized and okay, maybe now's the time to jump in.
I love that message. I love that message. All right, popping over to Durham here. And yeah, wow, Uxbridge. Look at you taking the top of the charts there in terms of median price, 1,355,000. Love to see that for our Uxbridge owners. Average price now at 895,000. Median down there at 836. And we get back to our proper sideways pyramid when we're looking at sales volume by price range. Nice
Yeah,
change from what we saw in York.
yeah. York's got a lot of anomalies. It kind of seems with the data that we saw out of January. It's a
Yeah.
lot different than what we're seeing in Simcoe. Durham seems to be, I think, when we get into it, a little bit stronger as well. They're really starting to see some activity pick up. It's York region we really got to keep an eye on and see which way it's going to go for them. And Durham looks great. Pyramid again. You've got a bulk of your sales coming in between 700,000 and a million, actually 1.25, and then drops off.
Yep.
Days on market, the median days on market down at 17 in January, which was really strong.
Yeah, really strong in comparison to the other regions that we're
And the
taking a
above
look at.
list price at 36.3.
Yeah. Yeah, and what's interesting to see, like they're doing really well here, and their detached market is actually even a little bit lower than what we were looking at in Simcoe. Not by much, but just a little. So it's
Yep.
interesting to see that,
Still a
even
high
include.
volume of the transactions.
Yeah, it's still the bulk. It's the bulk. We're sitting there basically at 60%.
Because
Um,
York region was around 47.
yeah, Yeah. And again, like we talked about Vaughan being so low on the median sale price list, clearly because of the amount of condos that it's carrying, right?
Mhm.
Obviously, not seeing quite the same in Durham. I think what we're seeing more of is the townhouse market as well, taking a little bit of a bigger portion there.
Yes. Yeah.
Yeah. Again, just seeing that median sale price holding, fairly steady. I want to go back. I want to jump ahead just for a second here and compare to where we were looking at our month over months. And yeah, just slightly in terms of the year over year, down 0.4, down 1 over the month over month. I would have expected a little bit different for Durham, as we look at this, but it is clearly just that little bit lower, even though maintaining. What are your thoughts on that? Just seeing that little bit of a decline as opposed to an increase in terms of our average and median price there.
Yeah, I at first glance on the data, I thought for sure that it would be a little bit stronger there. But still, they've got the new listing volume up over 138% month over month, 43% year over year. Um, Terminations not as bad. Days on market has fallen 32% from last year to 25 days, or sorry, 17 days from last year's 25 days, which was really
Yep.
good. Um,
Well, and I will say this about Durham, last year as well, it was one of the pockets where we were seeing more offers, more offer dates like that. And so I'm wondering if we're still seeing a little bit of residuals and people out there thinking, hey, we remember how last year went. Let's try this. And that's why we're seeing more terminations. They're getting more of that spillover from York Region, let's call it, whereas Simcoe's just cruising doing its own thing.
Because if we look at the above list price, we're looking at 36% for Durham,
Yeah.
which is the highest from the three areas. You're 12% in Simcoe, and you're 28% in York Region. Um, so definitely seeing that higher volume of over asking. You'd think that you're starting to see it move on the price side as well. Um, but maybe the condo market in the Durham area is just weighing them down a little much.
Well, and what this ties into for me is that narrative of, yeah, you held offers, but you sold at market value anyway. You're not selling more than what the home is worth. And when we see that in terms of our month over month and year over year is not really moving too much, that tells me more that narrative is holding true, that yeah, they are selling over the asking price, but it looks like they're selling more or less what market value should be, as opposed to bumping up and starting a new trend of price increases.
Yeah.
Yeah. All right, let's pop over to the big guy in the news, and the fact that we've had that pause and the conversations are at least happening. Yeah, I mean, Matt, I got to say you're watching this much more closely than I, even though we're all kind of getting wrapped up in it. And who's I will throw this to you as well, actually. Almost a little bit more of a student of Donald Trump and paying attention to how he likes to negotiate and reading between the lines in terms of his messaging. And there's a possibility that he walks away from all this without doing the tariffs and just saying like, I got what I wanted, and he bolsters himself a little bit, or it's going to be not quite what he said it was, and this is what he was going for all along.
That's the thing with Donald. It's attack, attack, attack. It's to ask for as much as possible and then start taking some of that away so that it feels like the other side is getting a bit of a win. Um, we saved ourselves a month. Canada's basically doing what it had proposed it was going to do in December, anyways,
Yep.
with the
Yep.
$1.3 billion spending. So he's agreed to wait another month. But I've always felt that there's a two-prong approach to his tariffs. I think he was threatening the border and threatening the fentanyl and the people crossing the border because the American people that voted him in want to hear that. They want to hear that he's taking
Mhm.
action. And it's also a way for him to see what he can get away with, what kind of negotiating power he has with these countries. And let's face it, Canada's in a weak position right now because of our economy. because we don't have a sitting government right now, because we're headed for potential election in the spring, the U.S. has a lot of leverage against Canada right now, and he's exposing that, and he's trying to see what he can get out of the deal. That's who Donald Trump is. That's how he does his business. So he's given us 30 days, but he's also said in the beginning that he is going to reevaluate the trade in April to see what additional tariffs he might put on our country. I think Donald Trump's ultimate plan is to try and bring more manufacturing back to the country. So if you tariff a country and you also say on the other side, if you bring your business to our country, we're only going to tax you at 15%. He's giving them a way to say, hey, well, if we're going to pay 25% in tariffs and we can, instead of paying 30% taxes here, we can pay 15% taxes there. He's thinking that he's going to drive companies back into the U.S. I think that's his tactic. It's odd, though, because Canada makes a lot of stuff that they sell to the U.S. that goes into a final product. Mm-hmm. We ship a lot of oil, minerals, things that are used to then build something else, right? So maybe that scenario works a little bit better for Mexico. Maybe they build a lot more product that's finished and gets sent over. China definitely does. So I don't know. He keeps asking for Canada to be the 51st state. He wants to do something with Greenland. He's got a lot of things on his plate right now, and because of the way he negotiates, it's very hard to tell exactly what he wants. He's not going to tell you to the last minute, and he's going to try and push the envelope to see what he can get with his rhetoric, I guess, is the only way to really say it, is mm-hmm. Try to really put the pressure down and see what cracks. And let's face it, Canada and Mexico, within 48 hours, we had deals in place to push this off for a month. And it'll be very interesting to see what happens over the next month with those relations.
Yeah, I think the high level takeaway is the way he governs, and like you mentioned, the rhetoric, it does cause a lot of uncertainty in the markets. And you see that both in the stock market, jobs market, all that kind of stuff. And I think that what's important for people getting ready to make a real estate decision is that we don't know what that's going to look like. But at the end of the day, we do know what's going on in the market right now, right? So take a look at the market where you're buying, take a look at the market where you're selling, figure out how you can overlap those in terms of timing. How long is it going to take me to sell mine versus how much choice do I have where I'm buying? What's the gap in the price there? And if all those things line up to get you what you want, you're still good to go. You just have to make sure that you're not getting swept up in all of this. And the biggest thing that I think that the people that will get hurt by what he's doing and the amount of uncertainty are the speculators. At the end of the day, if you're trying to make a smart real estate decision for your family because you want to upsize, you want to get to a new neighborhood, you got to be closer to family, all that is still very much possible. You can block out a lot of this stuff. It's the speculators that need to be watching out for what's going on here. And that's the big takeaway I'd leave people with today.
I absolutely agree. I agree on that. Long term, I think Canada's always going to do fantastic. There's always going to be ups and downs, and there's always going to be a boogeyman that shows his head. But I think I think at the end of the day, Canada, US get back on track and start moving forward together.
Yeah, this is an interesting one here. I'd like to jump into, because we did see, just new development, new sales in general last year really drop off a cliff. We saw the condo market stall like crazy, and to jump into that, you guys got to remember what we were building in the GTA in terms of condos, like those little shoe boxes that we were, very investor heavy. People don't want those. Families can't use those. Doesn't make sense. We're now cutting our immigration that we had record highs of. So a lot of our non-permanent residents that would be renting, that number is going to start to dwindle. And it's not a great time for investors to be buying into these things as well, for, even just the cost of carrying. So that's why we've seen that stall. And I don't think that it's something that we need to overly, I don't know if I want to say overly be concerned with, except if you're one of those investor clients. But I think if you're a family that's owning a condo, yes, we've seen prices come down, but you and I also looked at the increase in median price for some of those 2 and 3 bedroom units, that market actually did quite well in certain pockets last year because families are still willing to buy those. So again, you got to pull away from what the general statement is about the condo market and look specifically to what matters to you. But anyways, let's jump into this and take us away here, Matt.
Yeah, I mean, first out a shout out to Edge Realty Analytics. This is Ben Rabideau. He does a monthly research paper. If you haven't signed up for it, I highly recommend it. He's got great information. So what we can see here is the condo and the rental boom. These are under construction right now. So this isn't condos and rentals that have already hit the market. A lot of this is still under construction, and we're going to see that come on market this year and next year. And when you look at what's selling on the other side, very weak numbers. The condo market is the market to keep your eye on this year. There's going to be some pain in this market, unfortunately. It's just because we've built so much, we've built so many rentals. At the same time, like we've touched on in months before, we're seeing non-permanent residents leave the country in record amounts. If we were to get into a trade war with the US and 25% tariffs were to come on, we're going to see a couple 100,000 people lose their jobs. They're probably going to be non-permanent residents. And, if you're a resident of Canada and you lose your job, you're going to stay, you're still going to live in your house, you're still going to participate in the economy. If you're a non-permanent resident, you get laid off. You have to decide, do I stick around or do I go home? Do I go to another country for a job? That's what I'm keeping my eye on in terms of that. And then you're getting this massive wall of rental properties, one of which we haven't seen in a very, very long time. 2015 till now, we've had such a spike in rental properties under construction, and those are coming online this year with a softening in the rental market, which we'll see in the next chart.
Yeah, we talked about this before. It feels like a little too late. We were talking about the need for those purpose-built rentals. They're finally getting them going, and it's one hand doesn't know what the other one's doing. We're cutting down immigration. We ramped it up, in a big spike, and now we're cutting it out. And I don't know. Well, we'll see how it all pans out as it comes online. And as we're looking at here, we're seeing declines in terms of rentals, like what the asking prices are, and even what some of these are renting for. And Vancouver, year over year, seeing 7% decline. Toronto seeing a 6% decline. I think when you've got less people here in demand for those rentals, with more of them coming online, this is what you'd expect to see.
Yeah, Toronto down 6%, 7%. You got Mississauga for the 2 bedrooms. Actually, the 1 bedroom down 4.6%. So you're seeing these 1 bedrooms really getting smashed in the GTA area. And if we go over to Ben Rabideau's post that's next to this chart, we're seeing international students. These numbers are scaling back significantly. International students are either renting bedrooms or they're renting 1 bedroom apartments. And so we went from vacancy being the absolute lowest it's been since 2010 to the absolute highest it's been since 2010. And, Ben and myself as well, I rent to students. I've seen this as well happen, that the international students, when I first started renting to students, I had, maybe 10 Canadian students from Canada lined up at my front door. And by 2021, 2022, I had 100 people lined up at my door to look at a bedroom, and they were from all over the world and Canada. So I saw firsthand the impact that's had, that on the rental market. Was we had a lot of people come here for school and they were looking for places to live, and it had an effect on places with universities, colleges, and now that's scaling back now, and we're starting to see it in the data.
Yeah, absolutely. And the crazy fact that it went from a record low to a record high in the span of 12 months.
Yeah. Just like that. And so many economists, and Ben's 100% right. I've seen some of his other comments on this. So many economists said the students have no effect whatsoever on these markets. It's not that, it's this or it's that. And the data speaks for itself. It had an impact on the market. It drove rents for everyday people through the roof because we were using universities, colleges, as just a way to funnel people into the country, have them pay all this money. Uh, you know, I hope we get this under control and we sort out a respectable number of international students that come, so that our communities aren't the rentals in our communities aren't seeing massive upticks in rental prices.
Yeah. I think at the end of the day, any plan that gets created needs to be sustainable. And
That's it.
clearly that wasn't the case where we were those last couple of years. Looking at unemployment, obviously still ticking upwards. We're at 6.71% now in comparison. And I like that you've broken down kind of the areas here as we get from the Financial Post. Was there anything in particular that stuck out for you in terms of the numbers? You know, I see Toronto there at 8.4%.
It, you know, it is very important because you look at a national average of 6.7 and you kind of look in history and you say, okay, well, after the financial crisis, we were almost like a 9.5. You can see COVID, you went up to 13% on a national average. And we're seeing some Ontario cities, like you said, Toronto's at 8.4. Last month was at 8.1, so it's growing.
Mhm.
What were some of the other ones? Calgary at 7.8, Edmonton at 7.4, Windsor at 9.1% unemployment now. So we're seeing this uptick in a lot of these Ontario communities. Is a Hamilton 7.3, Oshawa. So this is the Durham region 7.9. We're starting to see these little pockets, and it's important to see, especially if you're an investor in real estate as well. When you're buying an investment property, you want to kind of see a lower unemployment rate. You want to see that it's getting stronger, because it's showing that there's more opportunity for people, and that's going to drive real estate prices as well. So when you start to see a net outflow of people working, and in certain communities getting up into the 7s and 8s and 9s, that's something you got to keep an eye on. You got to be mindful of how many people are unemployed in these areas.
Yeah, and again, remember if we're looking back to the financial crisis there at, just over 8.6, let's call it. I don't know the exact number of what it was there. Um, and then you're seeing Windsor at 9.1, right? Tack that up. And it's important to know that some of those areas are just getting hit a little bit harder. This has been a interesting story because we had that little uptick here in the beginning of the year in the bond market, right? And we had Nicole on a call that was talking, it's almost one of our biggest challenges is the news. Everybody's like, hey, we're in a rate cutting cycle and it's moving downwards. And then they come in and do the consultation with her. And of course, now they're looking for a fixed rate and not a variable rate. And she has to tell them, well, hey, actually this week, your fixed rates are actually up a little bit. That was at the beginning of January, and now we're seeing quite the opposite. We're seeing the bond market respond at a lower number, and even looking at Wawa, I made a post yesterday. Some of those rates are down 10, 20, and even 25 basis points in terms of the fixed rates that they're offering.
Yeah, I mean, if we look at going back to 2022, we've spiked up, but we've kind of bounced around in a certain range here. And the news with Donald Trump and the tariffs the other day finally brought the bond market out of that range, started to look like we were heading down further. We got an agreement. It came back up a little bit, but not back to where we kind of saw it before in the 2.8, 2.9 range. We're down in the 2.6. This is good for fixed rates. This will bring the fixed rates down because when the government cuts, when the Bank of Canada cuts the interest rates, that primarily affects the variable rate mortgages that you're going to get on lines of credit or a variable rate mortgage on your house. So when those variable rates were coming down, fixed was still the same. So really, it wasn't giving people this massive option to get a cheaper mortgage because fixed were solid at a lower price. And variable rate was just coming down to where fixed was. But now fixed is starting to come down because we're seeing the bond market soften. So that's a great sign for people that are a little bit worried about sitting in variable again. They just sat through variable and how volatile it was for them.
Yep.
A lot of conversations I'm having are like, I'd rather a fixed, whether it's a 2, 3, 4, or 5 year fixed. They don't want to go through the volatility of what they had the last couple of years. So definitely seeing the bond yields drop are great news for the fixed rate market.
Yeah, absolutely. I was just checking on a post there from Ron Butler saying that he's finding many fixed rates now below the 4% range,
Yep.
which he wasn't seeing earlier in the month. So great for those people looking for fixed rates. And like you said, a lot of people want the stability. I want to know what my mortgage payment's going to be for the next 5 years. I've got a 5 year plan. I know what I can carry. I'm comfortable with that. But when I'm in the variable to kind of bet against the market, and historically it's worked out well, you're paying less than what you would on that 5 year. But then you've got people that are up there at, $1,000 extra a month, $2,000 extra a month because of what their leverage is and how quickly those increases went up in the variable side. You could be scarred by that. I don't ever want to go through that again. All right, taking a look at what we think is going to happen in terms of the rate cutting cycle. Matt, I gotta confess, this is one of my favorite charts to look at because I love seeing the percentage and likelihood of, is that cut going to happen? How big might that cut be? But I've also really come to enjoy it because of how much it changes. We even last month we had I think a January 3rd report, then we had the January 25th report, and how much that changed even from what we were looking at December in terms of where they thought these cuts were going to be. And in our last video, we were saying it looked like we were going to stop at 2.75, that we weren't going to get that additional cut this year. And already now, even by July, there's a 53% chance we might be below 2.5, that we might be at 2.25. And there's an 84% chance that we get to 2.5 by June,
Yeah.
right? And now you mentioned that a lot of this was coming out in the heat of the tariff conversation, that had kind of been that flurry over a few days. So it's likely this will change again. But we're seeing economists from Bank of Canada, BMO, saying that the Bank of Canada needs to make another cut. So I think the outlook that we saw even from the beginning of January has already changed. We might see more of those cuts happening. And as you remind us all the time, when we're seeing these big cuts happen in such a short time frame, it's the reminder that it's because things aren't great at the end of the day.
Yeah, I always take bank expectations of rate cuts with a bit of a grain of salt. Um, they have a lot riding on lower rate cuts. They have a lot of customers that are going to have to refinance their properties at a higher mortgage rate. And for a lot of people over the last quite some time, we're able every 5 years to kind of refinance their property at a lower rate and also like move some debt in from car loans or credit cards and put those on those debts. And now we're in this particular spot that hasn't happened in quite some time, that you're having to refinance at a much higher rate. So rolling those debts in and stuff like that. So I think the banks are really pushing the Bank of Canada to say, hey, get these rates down lower, because it'll be better for our business. We'll get more business, and our clients won't potentially file for bankruptcy or sell the property and not have a loan at all. So I prefer more looking at the overnight repo rate and judging what the market is saying and not what the banks are saying.
What the banks are saying. Yeah, I agree 100%. Especially when you take a look at those and they're so in contrast to what the rest of the economy is saying we need, right? And so you can tell that they're advocating for their own best interests a lot of the time in those articles that you'll see. But nonetheless, I think that this is very, it's first of all, in terms of when the cuts have happened, this has been accurate the whole way through as we've been watching. I don't think it's missed for us once.
It hasn't missed for us once, but another important thing about this chart is it changes, yes, but if you're in the market for a product right now, whether it's a fixed, a variable, whatever year you're looking at, this is just to kind of give you a guide of maybe and sitting down with your mortgage broker or your agent and saying, do you see this? Is this the potential of cuts? And where should I go? Things can change, but you need to make a decision right now. This is just a tool to try and help you in the now. everything's always good. There's a reason we do a monthly update, is because things change all the time. So
Yes.
this is just a good tool if you need to refinance, get a mortgage right now, just to help you, a little extra information to help you make a decision.
Exactly. And nothing better than making sure you're having a great consultation with your mortgage professional.
That's it.
That is where these conversations need to
Not
be
with
had.
your real estate agent, have it with
No.
your mortgage agent. They know the ins and outs. We're putting this stuff out here just as a guide, but always have that conversation with your agent, mortgage agent.
Yeah, well said. Well said. All right. Coming over to today's mortgage rates, again, just as, kind of food for thought and making sure that you're monitoring it. We're seeing a little bit of a drop there. Obviously the biggest drop being seen in the 5-year fixed and the 5-year variable.
Yeah, both dropping 20%, which is great.
Yeah.
This is just a basket of 10 different lenders. This is an
Yep.
average price.
Yep.
But what the average price is telling us, what I'm most interested in, is the 30-day change of average rate. That's showing me things are trending down in the 5-year fixed and variable. That's what we want to see. That's a great sign. The 2-year fixed is increasing. But this just gives you a general idea of where things are headed. Can you get a better rate than a 4.82? Probably.
Yep. Yep.
Can you get a better one than 4.73 on the variable? Maybe. But definitely have a conversation with your mortgage broker on where to place in that. But big picture, rates are going down, and that's a great thing.
Yeah, I think what's important to note about that is all of our people that need to be refinancing this year. We got that stat out last month where there's been an 80% increase in the amount of renewals that are happening from November last year to April this year in comparison to the same time frame the year before. That is a lot of people that are going to be having to deal with that decision on what to do at renewal time. So seeing these rates start to come down a little bit is fantastic, because we know if the rate that you were at 5 years ago and the price point that you're at 5 years ago, you're looking at a considerable increase in your carrying costs for most people. So it's great to see the sign of these trending downwards a little bit. All right. Well, that's it for us today. Thank you so much for joining us. We look forward to walking you guys through these every week. We get together and we meet and we talk about the changes that we saw in the market on our big monthly year-end updates that we do on the second Wednesday of every month. We break down specific pockets and price points that are performing, looking for opportunity in the market. That's the big thing here, is to give you the information that you need to make smart decisions. Nothing beats a consultation with either Matthew or myself or your trusted real estate advisor, as well as your trusted mortgage professional. That's where the real good stuff happens, that's specific to you, as opposed to these general statements that we're looking at as we break down different markets. Matt, thank you so much for joining me today. Look forward to seeing you next week. Any final words before we take off?
Guys, just like, subscribe. Let's try and grow this channel. We're trying to bring high-level information for individuals to show the value that we have, that we bring to the table for our clients. Is we're extremely knowledgeable on the inner workings of the markets that we work in, and we want to share that with you. So like and subscribe, and let's see you in the next video.
Well said. All right, everybody. Bye for now. We'll see you next time.